Hi, Craig Covey here, and in this video I'm going to walk you through home insurance. So what I want to do here is share with you a couple of letters that I've received to myself personally with regard to my home insurance from other agents, and also walk you through with a brief explanation about the different coverages on a home policy, the deductibles, and what to look for when shopping for your insurance, as well as how the insurance policy works in regards to my fire claim, having a catastrophic claim, so that you can have a little bit better understanding about that too. The goal here is to help you to be a much more informed consumer of the products, so that when you are shopping for insurance, you have a better understanding of the insurance and what to look for, so that you know that you're getting the same or better coverage than what you currently have. So let's jump in and take a look. So starting with the letters that I've received in the mail here in the last 4 weeks, because I bought my house in October of 2002, and so I have since changed my insurance. It's in a different month because of the house fire I mentioned in the previous video. So they don't know that. They go off of what's in the Harris County Appraisal District is when I bought the home. And so they send letters based off of that, assuming, because a good majority of people keep their insurance policy effective dates at the same time as when they bought their home. And so for the majority of the time, if you've seen these letters, they probably fell in line with your renewal. And so when they send these letters, these quotes, they are sending it based off of the Harris County Appraisal District or the county appraisal district that your home is in. And so in this example here, you can see here, you can see a picture of my home. It's a 2-story. It's about 3,550 square feet. But you can see here, they made the insurance premium of this quote big and bold, $975.93. Well, that looks fantastic. I'm going to pick up the phone and call them right away. Well, and I don't mean to sound biased about it, but what gets me about this is because for me as an agent, I don't like these tactics, because you see here the dwelling value, $155,000 on the dwelling. I didn't pay that for the house. So I always explain to people when I'm talking to people, because I've got a little bit different scenario about it, but whenever I'm talking to people about the dwelling value for their home, I always share that there's 3 values to your home. Sort of like the 3 bears is the best way to remember it. There's the county appraisal district value. That's what you pay your taxes on, so you want that as low as possible. There's the market value. When you own your home and you're going to list it to sell, you want that to be as high as possible. Then there's the insurance replacement cost value, and you want that to be just right. Right now, as I'm sending this video to you, our average price per square foot, replacement cost per square foot for a dwelling for home insurance policy is $110 to $120 a square foot. So, and I'm going to point that out to you as an example. So if we take this $155,000 and divide that by, I'm trying to do a calculator here, by 3550, that's $43.66 a square foot. There is no way I could rebuild my home off of $155,000. This guy has opened himself up to something if that was an actual quote. It's not an actual quote. He's pulling this tactic to be able to get his premium down really low so that he'll get me enticed to want to call him. So let's say I pick up the phone and I call him. Now they're going to ask me the real underwriting questions. What year was your house built? What's the square footage? Is it a 1-story or 2-story? What's my date of birth? They're going to walk me through, and then they're going to give me a real quote, and now they're going to cross their fingers and hope that it's better premium than what I'm currently paying. So along the way, they're probably going to ask me what my current deductibles are, what my dwelling coverage is, things like that, so they can try and do a comparison. But this is not their real quote. They're just trying to get me to call them. So I don't like this tactic by getting somebody to call. I'd much rather work it a different way. So here's another one that I received. This one here, you can see they did the dwelling value $479,000. So if we did $479,000 divided by 3550 square footage, that's $135 a square foot. Not bad, but still a little bit high. Remember I told you a minute ago, the average price per square foot around here is $110 to $120 a square foot. So that's a little bit high. But let me point out to you here in a second why they would want to make that high. So for me, I'm looking for this to be, because I'm in an average home, I'm looking for it to be $110 to $120 a square foot. So I think that's a little bit overvalued, but each carrier does their own replacement cost calculation. So that's okay. You might see a wide range if you're getting quotes. But I don't have a lot of crown molding. I don't have a lot of high-end upgrades in my home. If you have a lot of high-end upgrades in your home, then this might be a better fit for that. But as you shop around, you're going to talk to the agents. You're going to share with them what you've done to your home, if you've done any remodeling to a bathroom or a kitchen or anything like that. So back to this. Why would they do this replacement cost so high? And they circle the premium down there. They list it twice, big bold premium up there at the right-hand side, $1,213 a year. They even circle it down at the bottom here in the middle, $1,213 a year. But as you look at the deductibles right above that, 1% for all other perils, and I'm going to skip the middle one on the far right, 1%, they've broken out wind and hail, 5% for the main peril that we incur here, 5% deductible for hurricanes or named storms. Well, now you multiply 5% times 479,000, and I'm basically paying for a new roof by myself. That's I think that's almost $24,000. So why would I want to go with the rate like that, where I'm going to have a $24,000 deductible if the main peril that we're mostly concerned about here in our area, right? Why would I want to carry 5% deductible? Well, I wouldn't. Nobody would. But they want that premium to look low. Now, there are agents out there, and because I come across declaration pages all the time in which people, where I'm doing quotes for them, and I've seen where they've had 5% deductibles, and they never even knew that that's what they had. But they may have fallen into that trap that I described to you. Remember in that first video? One of those traps where if you fill out website information, they turn around and sell your details to a bunch of agents. And those agents, their motivation is to look really cheap. Well, one of the ways that they can make themselves look cheaper than everyone else is by raising your deductibles. So I've come across several times where people have had 5% deductibles on their home insurance policy and they never knew it. So that's a $15,000, $25,000 deductible on their policy. Well, I'm the one that's telling them because their agents aren't communicating with them about it. Anyway, don't mean to get off on a tangent, but that's one of the places for you to look to notice what your deductibles are. Always pay attention to your deductibles and what that means in relation to it. So here's a sample. This you can see it's kind of scrubbed down, trying to look generic so that you're not seeing, I'm not favoring a certain carrier or anything like that, but I want to be able to walk through and point out to you so that you could see the different parts of the policy. So if you haven't pulled out your declaration pages, go ahead and pull those out, and you'll be able to look and notice these on your current declaration of your policy. The dwelling part of the policy, that's the part of the policy that covers your home itself. So the outside walls, the inside walls, the ceilings, the floors, everything that makes up the home itself is the dwelling. Other structures is a percentage based off of the dwelling value, and those would be things like a detached garage, a fence, if you've got a shed in the backyard, maybe a gazebo or a pool. Personal property, those are everything that you would move into the home. So that's all your clothes, your mattresses, your furniture, your Tupperware, dishes, shoes, all those things that you move into the home. Loss of use, that covers you if you incur a peril and you cannot live in your home while it's being repaired, then the loss of use pays for the temporary housing where you have to move to live temporarily while your home is being repaired. Liability and medical, I call those friendship preservers. They're a $0 deductible, and those cover you in the instance where there's somebody that's visiting your home. They're not part of your normal household. There's somebody that's visiting your home. Say you have a holiday party and somebody faints or they trip over the threshold as they're walking in the door and they break their foot. Well, you just want to get them an ambulance ride or emergency room care, get them taken care of. And so the medical part of this instance would pay for their emergency room care. And then if it's somebody who's litigious, they want to sue you for monetary gain, well, then the personal liability part of the policy kicks in to help settle out that claim for you. Deductibles. So on this example, I've got 1% deductibles. A good majority of the carriers in the area right now, they're at 2% deductibles for wind and hail and hurricane. I still personally have some carriers that are doing 1%, but that's changing. They've already given us notice that in the next couple months, they're going to be moving to a 2% deductible. So if you are interested in getting quotes from us on your home insurance and you like the idea of looking at a 1% deductible for wind, hail, and hurricane, let's have a conversation. Let's talk about it. But the deductibles, usually all of the perils is a standalone. Some carriers will do wind, hail, and hurricane combined, like in this example, or they'll do wind and hail, and they can split out the hurricane deductible by itself. This is an HO3 policy. That's the most common type of policy here in Texas. So it's replacement costs on the dwelling, replacement costs on the contents. There's some other, it's 14 perils that are covered. It's a more robust type of policy. Another common type of policy you might come across would be an HOB, sometimes an HO5. So the type of policy you always want to see quoted for you is an HO3, an HOB, or an HO5. If you come across an HOA, it's a named peril policy, but it's up to the agent to endorse that policy to try and get up to matching an HO3 or an HOB. It can't quite get there. For example, the water endorsement. And what I mean by water is the sudden and accidental discharge of any water source or steam inside the home. An HOA policy usually gets limited at a max amount of coverage up to $25,000. Depends on the carrier. An HO3, HOB, and HO5, those policies, they cover that water automatically included in their policies, and they cover it at the same amount as the dwelling value. So in this example here, the $362,000 for the dwelling, that's how much water coverage you would have. Now I mention that because my number one claim for all other perils, that deductible, is water. And I've seen every type of claim there can be when it comes to that water endorsement. For wind, hail, and hurricane, my number one claim is a hurricane. So let me walk you through, because I had a house fire, I mentioned to you. So I had a house fire a few years ago, middle of the night, very stressful situation for us. We all got out of the house okay, but here's some pictures of what we endured through the whole thing. We were out of our house for 10.5 months. So the dwelling coverage of our policy, like in this example here, paid for our walls. So our walls had to be in the water heater, a lot of damage. So half of our house had to be gutted. So everything was taken down to the studs. The flooring was all ripped up. The ceilings, that whole side of the house was taken to the studs. The other side of the house had to be all totally wiped down, treated, and repainted. And then the side that was gutted, taken down to the studs were treated, because the smoke and the soot from the fire is very acidic. And the fire builds up pressure and puts it everywhere. And everything that we tried to save was disintegrating within a couple of weeks. So the dwelling part of the policy pays for the house part itself to get repaired. The personal property paid for our clothes to be specially treated and cleaned, or some clothes replaced. Our electronics were treated or replaced. We had to replace all of our furniture, our mattresses, our Tupperware, anything that was soft had to be replaced. Loss of use. We found another home for us to live in temporarily for those 10.5 months, and so the loss of use paid for the housing that we were in while we were there. And being a fire, it went to the all other perils deductible. We had a 1% deductible, so our part in this example, our part of the claim would be $3,620, and the insurance would take care of the rest. It was a $275,000 claim. I had to think about it because we also lost both of our cars in the fire as well. You could see in the pictures that they were in the garage. So that's it. I hope you found this helpful. The information I provided to you so that you are feeling like you're a much better consumer of a home insurance and the coverage and the policy itself. And so when you start shopping for home insurance, you know what to look for, you know what kind of conversation to have with the agents, and you know what you're looking for now, and you know what you want to hear in return from the agents. If we can be of any help, if you'd like for us to do quotes for you, we'd love to do that. Just send us an email or give us a call. We'd love to work with you. I've got another video for you here about auto insurance, and I'm going to walk you through a similar scenario about the coverages, what each part means for you, and what to look for when you're shopping for auto insurance. So stay tuned, and you'll see that one here in a minute. Thanks, and take care.